The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, early edition, 8:06 in the morning instead of 10:06 Eastern Time. Snowy day and night last night. Hopefully I can get out soon. Need to leave early. Now, what we're looking at is the Dow futures are only up $7 at 49,270. I say only, but actually I should be quite impressed because overnight they slipped down to down to 48,850. So they're at 49,270 right now. That's pretty darn good. I'll do the rest when I'll do it right now. The Dow itself, the cash, it got this double top, triple top that's in the 49,600 area. Can it break that? I think there's a bit of resistance now, but at the same time, I'm seeing a rotation that's saying, it's getting a little more difficult. But there's still, the 9-period moving average is still strong. The S&P, that's the E-mini I'm going to right now. This is early in the morning, is down 3. It was all the way down to 68.79, and now it's at 69.42. That's pretty impressive. If you look at the weekly chart, we've just been going sideways since that high that was made right there. That was in October. That was the last week of October at 7,013.50, and we're still in that range. We've gone slightly higher, but that's very interesting that it's taken this amount of time to really consolidate. So far, it's a high-level consolidation. The QQQ, that is the cash NDX 100 Invesco QQQ Trust series, has struggled since that October the 29th high of 637.01. Here's the Chapman Wave Inside Track Repellent Zone. We're there. We've been in that range for such a long time. And if you look at the weekly chart, we're really just arching over. We haven't broken to the upside yet. I would like to go to the IW. That was the QQQ. I should also do the NQ, which is the futures. You can see I'd say weak, but you're only at 25,695. I mean, you're up fairly near the all-time highs. So it's quite impressive at this particular point. In January, January, it's very interesting. We've got all these different technical aspects that you look at. The first few days of January, the last day of January, blah, blah, blah. All I can say is that if my monthly charts are still only in leg A or leg B, we've got a very good 2026 to come, even if it gets very choppy. And I think it's starting to get choppy. IWM, the Russell 2000 cash, is down 13 cents right now, 264.68, made an all-time high, 267.22 on Thursday, pull back Friday, and now look at the RTY. That's the futures. The futures are trading down, but they've come back to the high of the day, down just $1.80 at 26.77. 0.80 after making an all-time high up in the 27.49 area. So this is going to be fascinating. Really what I'm looking at is the semiconductors. Semiconductors are down 3 today. This is tough. All-time high on Thursday. Pulls back from 408.73 to 400 on Friday, and now it's down 3 at 397. So it's getting just a little toppy. But so far, the 9-period moving average is way over the 14. The MACD is good. The relative strength, this is the gray line right here, and the daily is kind of flat, but near the highs. The stochastics at 82%. That's still good. The on-balance volumes a tad overbought. Peak A, peak B, C, D. We made a peak E so far in the relative strength, but I'm just watching this closely because do I want to really short the SOXS? Trading at 2.08. I mean, it looked like a great short all the way down, but just because it's at $2 doesn't mean to say that it's a short. That it's a buy, but going 3 times short the estimations. I'm holding off a little bit. Oh, it's so tempting, but you can't just do it because it's the low price and because the SMH is at a high price. You got to see some technical aspect. And at this particular point, I'm seeing some signs, but nothing definitive. Now let's go to gold. Wow, just look at this. $100 up. 5,000, talking about 5,000 as a resistance level. He didn't even hear that. I mean, he must have said, would somebody say something out there? 5,077. Amazing. Look at silver. Silver is trading right through that leg D. It's extended. Look at that. I thought there was a little chance that we're going to be looking at that to see what happens next. Well, what happens next? It spiked 8%. Up 8.5 at 109.89. This is silver. This is a little silver, like a little brother or a little sister. Yeah, look at how it's grown up. Isn't that amazing? Beautiful. Looks great, continuous silver now, but it's also telling us something. It's telling us about uncertainty, geopolitical uncertainty. Well, what can we do? That's what it says. Platinum right now, all-time high. Yes, all-time high as we speak at 28.40, up 99. High-grade copper. Running just a little bit, not the same as the others, because it has a potential for a little double top here, not a little, a double top from, I think in July, up in the 6.18 area, I think it was that, and now we've just made a 6.154, another leg D going to a peak D last week. But I don't see any sign yet of strain. It's still doing very well. That's high-grade copper. Let's look at crude oil. Crude oil right now is trading up. Now it's down 13 cents. It's holding quite well, just above the 200-period moving average. I'm looking at crude oil, and I'm thinking, I think it's getting ready. The 9-period moving average at the close on Friday turned, on the weekly chart, turned positive. The stochastic still only at 63. If that goes to 80% at any point in the next 2 weeks, you're looking at a nice big pop to the upside in crude oil. Wouldn't that be something? All right, well, it hasn't done it yet. I am a little nervous about the XLF. That's the financials, the biggies, trading down 6 cents today at 53.01. 52.54 was the all-time high on the 6th of January. Made a Chapman wave 2-bar reversal at peak E, and it got repelled at the inside track repellent line. I think there's a chance that this is going to be a G, and that we are going to be pulling back. And the KRE did very well, but on Friday, it pulled back pretty darn sharply. It went from the 71s down to the 67s, and now it's down, at 67.52, down 9 cents. So I'm really watching that very closely. I question about the bonds, TLT. The TLT right now trading, where are we? Down, up 33 cents, just in a trading band, 88.26. If you look at the TBT, you'll see the same thing, trading band, popped. Now, this has the look of an E. I'm going to put an E/A right here to say, you know what? Be ready for anything. And that would say that yields are trying to come down. But anyway, we'll monitor this closely. So I've gone through a bunch of things that I needed to look at. Wood, this is the iShares Global Timber and Forestry ETF that I always follow. It made a peak D top the other day at a new recovery high. Not the all-time high. That's way, way, way higher. But this is a pretty darn good move above the 200-period moving average. All the technicals are good. So that's a good sign, a good economic sign globally. I'll be back in a moment. Basil Chapman, early edition of the Tiger Technicians Hour, January the 26th at 8:14 a.m. Eastern Time. After a big snowstorm last night. Oh, and the Patriots won. Yep, very nice.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Hi folks, we're back just showing you the E-mini. Isn't this fascinating? Look at this. E-mini goes from the 200-period moving average up, goes to a peak D at about 11 o'clock. When was that? That's the 24th. That's Friday. Then we come down. Then overnight, you pull back. Very open last night, very sharply lower at about 68, 80, somewhere around there, 70. And then go peak A, P, C, D. Up towards the 200-period moving average. The technicals are improving, so it does want to get to there, and it gets to the 200-period moving average. There are 3 peak Ds, well, 2 peak Ds and an E, and then what does it do? It pulls back under the 200-period moving average. Now it's back walking above it, not quite as sharply as before, but it's just fascinating. The futures are up $1.25. After being down, 47 or something like that, very sharply. So I'll be back to this in a moment. Of course, it'll all be redundant when this is replayed at 10:19 this morning. Let me get back to the story. So what I'm looking at here is that there's a kind of a rotation going on. As I said, the XLF, which was a leader, as just for the last 3 weeks since the 6th of January, it's just been sluggish, pulled back very sharply, down, did I put 52? No, that was not right. The high was, it was a Chapman wave 2-bar reversal at 56.51 and the 56.52. I remember that. So it was 50. I just got that completely wrong. 56.52, 6.52. And now we're down at 53. It's not a big deal, 3 points. But what is a big deal is that it got repelled at that particular inside track repellent zone. And pretty sharply, and look, 3 moves, it came down there. Look how long it took before. It took about 6 or 7 weeks before it made the low. So this is something to monitor. At the same time, you've got this rotation that's going through the sectors, and that to me is very important. Of course, I forgot Bitcoin. Bitcoin is lousy as always, down at 1570 at 87,930. I think it's on its way to retest certainly the low that was made right there. That's the low of the 18th of December at 85,275. It's not so much that it is in a downtrend. It's just that it's going nowhere. It's not showing leadership at all. Same with Ethereum. It's just, look, here it is, right on this inside track propellant zone. And if Ethereum trading at 27.46 right now goes underneath 31, then we're looking at, look at this. Then that becomes 27.70s becomes resistance. So I'm watching this very closely. And now what I want you to do is, had a question, and I'm getting to it right now. CLSK. So I got a couple of questions. Let me get to them. CLSK, that is, what is that? Oh, right, Clean Spark Inc. I should have known that. Clean Spark Inc. I lost all my notation here. It was once upon a time Clean. Is that an S, capital S? Nope. Spark, SPAC, Inc. All right. So here we are trading up peak A, peak B. Let me just see, is that the low? There's the low. Look. So you always go to the lowest low in the Chapman methodology. That's the lowest low right there at about 9 back at the end of November. And what do? Spike up sharply to an A. This becomes an A as well, and that becomes a B, and that becomes a C. It doesn't go to a C minus because it didn't take out the low bar. Instead, it did pull back very sharply and started a brand new peak A, another A right there. Remember, once you've got your starting point right here, every peak is notated. It's just not a big deal. You just have to notate it, that's all, because you want to get to your D as quickly. How can I put it? I can't say as quickly as possible. We're not the chart. We can't tell it how quickly. We want to get to the letter D as cleanly as possible. So that becomes a B underneath the previous one, and that becomes another C. So, yeah, it's doing very nice rallies, but so far it's proved that C has been a little difficult. Let's go to the monthly chart. Nope, that's a B right there. I need, B, C, D. There it is, D, Clean Spark gets a D right there. It's not a grade. It is a grading the waves. Yep. And then it pulls back pretty sharply. It goes from 24 down to the 7s or 8s. Whoa. And then it has another A, B, C. Oh, this is becoming a habit, huh? Another. Look, that became a D. So you have to take it from the next low. You can't take it from any low. It has to be the low that looks like it's the most important. So that becomes an A, that becomes a B. I've done the notation. In those, now we'll just do it quickly. A, B, this is Clean Spark. Clean Spark Inc. So what I like to do is to grab this and I put in, I usually type it in, but I haven't this time. I did at one point, I remember, Spark Inc. I'm just trying to make sure that I'm not calling it something that it sounds like. So I'm going to do energy innovation and a proven track record of delivering reliable large-scale power solutions. So I'm going to put here power solutions, energy power solutions, energy power solutions. Okay, so with that said, where are we? So we kind of stuck in a range. The 9-period moving average is strong. The MACD is strong. The retro strength is good. The on-balance volume's overbought. The stochastic's flat at 73. Oh, I would have preferred it at 80. All right, all I can tell you is, based on this particular pattern, now what I like to do is to open it out a little bit. There. Now what you want to do is to go from that low and you go peak A, B, C, D. So this went to an E and it pulled back very sharply. So this is all underneath, very much underneath that whole area of the 23s that it hit. And now it's just trading with the 200-period moving average as a magnet. It goes up, it goes down. It's like an oscillation. And this is the rope. This is like at the circus. And here's the rope and you're running around. Oh, at the Olympics. There you are. Now what we're looking at is right there. I can only say what has to happen, and I'm not even sure if it goes to a D that's it, because it's so low down from the C. It's below the previous C. So what needs to be, in this particular instance, that is just a steady move up in a rectangle. No, I can call it a rectangle. I'll start off with a rectangle right there. But it has to be more like a lopsided cup formation, right? It has to be like that, and then it has to go like that. So I don't want to get too carried away and say, oh, yeah, this is going straight to this high right here, even though a lot of evidence is to say that it's trying to rebuild strength to go to the 15.49 level, and it's at 1360 right now. But I'll tell you what I would look at. I think this is very strong magnet support right here on the 200-period moving average of 12.49, call it 1250. Not the point. The point is it might have to still go down one more time and then come back to that magnet line. But the way I'm looking at it, and here's the issue, is that it could very well, instead of making the cup formation, if it starts to struggle here, and I'm looking at energy, I'm saying, we got a little surprise, I think, in the energy sector. What I really want to see is that CLSK, Clean Spark, actually has the gumption by today's Monday, Tuesday, Wednesday, by Wednesday, to trade just in this area right here into the body of that, and that says the open on the 12th of December was 14.69. So if it's able to tag 14.80, go into that bar, that's a very good sign. So let's just go one step at a time. I don't want to get carried away here. It's almost 8:30 in the morning. It's 8:26. I'll be back straight off this Basil Chapman early edition.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi folks, we're back, and I just managed to take a quick call in the middle of that, so I lost my concentration. Yes, peak F in the 1 minute chart, pulling back a little bit down 250. This is really not bad action at all. I am anticipating that we're going to see choppiness this week. I don't think we see a new high. And if we do, that'll be a very pleasant surprise. But I think that 49,600 on the Dow is very strong resistance, and the others look as if they're struggling a little bit. That doesn't mean to say you have to tank or anything like. It just says watch this closely. So back to CLSK, you need to see 14, or did I say it was right there? Yes, you have to see that open on the 12th, which is at 1549. You've got to see that tag. You see that tag, that's a good sign. So what I am going to say is, at this particular moment, I think it's just stuck. Stuck is sideways is a trading range, and that's all there is to it that I can see. But within that context, what I'm going to say to you is if this goes under 1170, closes under 1170, that's a point lower, than it closed on Friday, that's going to be an issue. But at this particular point, I don't really see it as a serious buy. I see it as the potential to be able to go at least a little higher, and we'll go one step at a time to see what happens by tomorrow. I'll come back to it. All right, within that context, I'm a little distracted here because there's so many things going on. Should I get that? I do have to get that. I'm sorry. Hello? Yes, you are. Yes. Okay, so I'm kind of in the middle of something, and I agree. So can I call you back and make it a change in the schedule then? Thank you very much. Fine. Bye-bye. Okay, fine. Bye. All right, so I actually could have done the 10 o'clock show. I thought I had an appointment, but everybody's snowed in. Here we go. So a couple of things that I want to look at here that I considered important. I made a note of them over the weekend. So look here, the XLP, right there. The XLP trading in leg B, and this is the select consumer staples. Now, this is fascinating to me because it's got Walmart, Costco, Procter & Gamble, Coca-Cola, Philip Morris, just a whole bunch of those standard, those core home goods type things. Okay, within that context, this is broken out. It's under the 83.90 all-time high, and this to me was a little surprise because the XLP, let me just open this up so that you can see it a little better. So this is in terms of sectors. The all-time high was right there. I should have typed in 84.53 back in September of 2024. This is a weekly chart. Let me put 84.53 so I don't forget that, 84. And look how we've gone so close, but we haven't broken 84. Because I was talking, anybody hear what I said? 63. Let's just make it 63. All right. So we're at 83.90, and now we're at 82.91. But you can see it's like hugging. It's trying to get to this area. Now, this could be distribution. It could be a year and a half of a distribution, right? But in the meantime, I don't want to look at it that way. What I want to look at is the 9-period moving average on the weekly chart 2 weeks ago went positive. And the price went in this Chapman Wave inside track towards the upside. Now, remember, when you're looking at the XLP, you're looking at nothing is traditional. Everything's changed. Tradition, shmadition. You just don't have tradition anymore. So all I can say is that it used to be that these were defensive, not defense like Raytheon, but defensive stocks that money used to go to when the market was it was at a difficult point, and the S&P and the Dow and the QQQ were kind of staggering and they were not doing very well. Then the defensive stocks would take over. But wait a minute, making all-time highs in some of these areas, semiconductors, the Russell 2000. So everything is topsy-turvy. So I'm impressed with this. I'm impressed with the fact that finally you've got Procter & Gamble, which looked like it just couldn't hold a rally, is turning up and doing very nicely. I still think that there are some others in the area that at this point might be better. Look, Clorox. I thought Clorox, but no, not so. It's done very nicely in terms of the rally, going from the 97 to 113. Was it Clorox? So we've got Procter & Gamble, Clorox. Oh, that's right. You've got KHC, Heinz. Oops, makes lower lows. All right, so you can see it's a mixed picture, but all of a sudden you've got some areas like Mo. I had this all notated recently, and now it's gone. This is, there we go. This is, where did it go? This is Altria, holding quite nicely, coming back, trying to rally, hasn't turned pink yet. So I'm saying there's a rotation going on. The other part of the rotation is the DBC. Look at this. This is the DBC. This is the DB Commodity Index, showing signs of life, coming from the 200-period moving average, whoosh, going up to 24.35, up 17 cents this morning in leg D. Leg E, look at this, in the weekly chart. Yeah, you look at the monthly chart. Wait a minute, you say, this is an index that went from 30.64. Oh, you got that 64 finally, huh? 30.64 right there. 64. And that was, I think it was June. Let me just double check here. That was, June. June of 2022. And then it comes all the way back to 20. So, it gets a third, it takes a third off, and then it comes back again. But look how steadily it's moving up. Look at the MACD cross positive. Look at the relative strength in the monthly chart. Look at the stochastic at 81%. I'm a little disappointed in the relative, in the on-balance volume. It's just not participating at all. Price is price. Price is moving up. A lot of work has to be done in the weekly chart to get the stochastic from 60 to 80%. But it is saying that this is something you cannot ignore. DB commodity, that has more crude oil. We used to be in the DBA forever. I mean, we were just forever. And then I said, all right, we're done. We're getting out. It made its high. And we just, I'm just watching it for now. And look, the DBA has been struggling. This is more the agriculture. The other is more the other commodities. So it's very selective. That's what we're looking at, this whole rotation through area after area. Look at what's happened in the AIQ, one of the positions we've had for ages, and we're still holding it. We've got two small positions left, one at 28.99, the other 36, and here it is at 52.35. There's the Chapman flag formation. This is the falling axe. If this can break to the upside, it could get to the 53.25 level. Right now it's at 52.35. So there's a lot going on in this rotation, and that's really, if you can get a rotation, it means you can hold the market up because some area takes over the strength while the other area starts to have some weakness because it's now having a rest. I'll be back in a moment. Dow futures are down 7.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Intelligent ETF is right there. Is it going to go higher? I think it's stuck in this rectangle. Remember, rectangle formations can be extremely frustrating if you don't identify which pattern it is. And at this particular point, the pattern is it's making higher highs and higher lows, right? The 9-period moving average is above the 14. The MACD is very weak. The retro strength is much weaker than it was at the high of 53.75. And the, let's see, stochastic 78, yep. And the, here we go, unbalanced volume is running some. So I'm looking at this and I'm saying, you tell me what's next. Because if the AIQ trading at 52.35 down 16 cents right now actually starts to trade underneath the midpoint of this candle, 51.60, let's call it, it goes under 51.60, it says there's a good chance it's going to arch over, and then all of a sudden, so let me get rid of this and I'll show you what I like to do. I like to say there's always 2 fighting patterns, especially within the rectangle. The one is that it makes a steady move, peak A, peak B, and it goes to a C and even a D underneath the previous high, just under, right on, or just above. And then you've got to be careful that it doesn't come back to halfway, the halfway marker of the rectangle, because that means it's going to arch over. Or it doesn't get there at all. In fact, it turns from the cup formation, the rectangle or cup formation, and it arches over. And I'm thinking you can go slightly higher. I'm looking at this as saying the AIQ. This is very important. Global Intelligence Artificial artificial intelligence. I think that if it has limited upside, it says you can go sideways for a little while. You can even go from 52, I don't want to say down to the 47 level. It was actually 46, 48 the week of the 21st of November, yet, because the 9 is so strong over the 14, it'll take a move at least to 49 to get that green to go pink. So this is still very positive, and that's the whole thing about these sideways formations. Not only that, you've got your surprise factor. Every time you think you're about to write off something, look at this, Microsoft, which we haven't added or subtracted or done anything with for ages. We're still long from 338, and here it is at 465. And look, right there, I drew this in. I said, oh, Microsoft, there's a chance it's going to retest this dash pink target support line, and that was at 436. Instead, what does it do? It goes to 4. I love this. It goes to 438 on the 21st. To 438 on the 21st, 0.68. And what does it do? A green candle, and then suddenly there's news. Whoosh! It goes to the upside on Friday, and it hits 471.10. I mean, 438 to 471, 40 points, a 10% move, nothing. But I don't think it's affected Microsoft that positively yet. It's still got a lot of work to do to be able to build the right side that says making higher highs and higher lows, and all the technicals have improved. So this is what I'm saying, that I'll go back to the SMHs when I said just didn't have the courage to put a short on, even though it's so tempting. Look, the SOXS. Now, I don't know when they're going to do a reverse split. I've been expecting a reverse split for ages. They haven't had one in forever. And here it is at $2.09. It's actually up 7 cents right now, up 3.4% pre-market. So you say, $2. What am I risking? You're risking $2. I mean, it's nothing. It's not insignificant, because it's one of those things when you get in, you say, I'm going to really get in. I'm going to buy thousands of these little things. No. You've got to be careful. Yes, the on-bounce made a nice V-shaped turnaround, but look at the stochastic. It is just flat. So it's going to have to be the SMHs just out of the blue. It happened on Friday. You got Intel. Remember, Intel was went to a peak G at 54.60, and then out of the blue, kaboom. Bad news, bad earnings, and I kept wondering what on earth Intel's was, and still is, I'm sure, one of the worst of the semiconductors. Now they're getting all this money because it's considered an American company, but wow, they've got a lot to do. I mean, I don't understand the whole thing about the fabs and everything, exactly how everything works. I mean, kind of generally like most people, but the details say Intel, to go above the high that was made back in December of 2023, it is 51.28. And then it goes all the way down to 17.67 in April of 2025, when the market turned around. And it's gone from 27, it's got an exact double, to 54.60 when they've got nothing. So I'm just really suspicious, and that's what you got to be careful. And yet, Intel's sharp moved down 17% or something like that on Friday. What did it do to the SMHs? The SMHs reluctantly turned down from 408.73, and now they're at 496.66, down 3.43. So the best of the best stay the best of the best. I mean, I'm just telling you this because now let's see what gold is. The best of the best right now. Look at this. Pulling back from, shame. It's pulling back from an intraday high of 5,107.9 to 5,068. Down at 89, it was actually over 100 points high. Hey, this is amazing. But as I've said before, I don't see anything I can't say in the fundamentals. I don't know how to call it, because it's really a political thing. It's not even, it's geopolitical. And that's kind of the way I've looked at it for a long time. Even that big pullback from 45.84 back in late December, it goes in 3, 4, 5. In 5 sessions, it goes from 45.84 to 42.84, a buying opportunity deluxe. And then what does it do? And you've heard Tommy talking about, Tommy, we're coming up next. You heard Tommy talking about this, that you've got to be prepared in some way. This is an aberration. It doesn't usually work out like this. And you've just got to be, there are a couple of ways to do it. My way always with subscribers, and that's what we did with our PHYS, which is the physical gold. This is the Sprott physical gold units. Is to take something off. Now, I made a big mistake by not putting back on because we were so busy with other areas, but this was the area to be in. And yet, we still have some, but along from 20, and here it is at 38.7. Is this going to double? Is it going to hit 40, and then all of a sudden something happens? And all I'm saying is, and I think this is a very important, for me, it's a very important aspect. When the margin requirements start to be raised, and I think we're getting close to that, that's when I don't see anything geopolitically. Why would all of a sudden everybody say, we're at peace, everything's fine? No, I don't think that's the way countries are functioning right now. They're very nervous. So 38.79, up 72 cents right now. That's what you're going to have to wait for. And Tommy has said, be prepared. Put stops in I think he's absolutely correct. You've got to have some money management here. Maybe my way is not right by taking little bits off. Maybe you should just ride the thing through and raise your stop, have a trading stop, a core stop on something, and a trading stop. And if you had a trading stop here, there hasn't been a down day to take you out. It's just been on moving up. Or whatever way suits you, because you're a very long-term holder. You've got to think the way through. But I would say prudence says, look, you've got a gift here. Take a little bit off. Just reward yourself for being patient. I'll be back in a moment talking about patience. The Dow futures are up 45 and the S&P is up 3. I'll be right back. Basil Chapman, early edition.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
So I just want to do this real quickly. Nike, this is sportswear, sports and sportswear, trading at 64.66, down 38 cents. Look at the way it's just that 200 period moving up average at 68 has been a magnet. It keeps trying to drag it back up. But in fact, it's something that what you need to monitor is that when you are looking at certain aspects and you want things to go, you think that they're going to go down, look at how strong that 9-period moving average is above the 14. That's the reason why I was saying the other day that it could bounce. You've got to understand that that is it's like a cork in water. The moment you let go, it's going to pop to the upside. So now you've got to watch it closely. So If it's able to close above 66 any day this week, that's very good. If it pulls back and goes under 64, this is watch the little H pattern, because now you're pulling away from the 200-period moving average. So this is the early edition. This is 8:55 a.m. Eastern Time. I thought I'd have to do my show early because I had an appointment, but that got canceled because of all the snow and everything. But in the meantime, the show is done. And I'm looking at this, and we haven't done any shorting yet. I'm looking at this, and I'm saying rotations going on. Look at GE, looks fantastic, then it looks horrible. That's the way this market is. General Motors right now is still looking really good, but it's starting to pull back. So I'm saying the deep cyclicals are rotating. They're taking a bit of a breather, Alcoa included. When we're along these, all of these, Alcoa is holding very well, but it seems to me that you've got to monitor it very closely. So with that said, I'm going to hand you over to Tommy O'Brien's coming out for the morning market kickoff. This is the early show. If this is replayed later on, it'll be Steve Rhodes. Check out my opening call, my daily newsletter. We've got some positions, new positions on that I think are actually starting to show themselves as being quite strong in different areas, and that's going to be very good. All right, with that said, just one other thing is the VIX index. The VIX index is trading right now up 45 cents at 16.54. It went all the way from the 21s down to the 15s. And the VIX is suggesting to me that buying is coming in, and it's holding pretty darn well. So that just says to me, this is going to be I'm sure this is going to be a choppy week, and I wouldn't be surprised, slightly lower highs, but also slightly lower lows. That's kind of what I'm looking at. We'll see what's going to happen. Have a wonderful day. I will see you tomorrow. Basil Chapman signing off.
Sharpening your skills as an investor is like getting better